Hi, it's Barry NDR. Today we're speaking to Michael Pento, president and founder of Pento Portfolio Strategies. If any of you are not familiar with Michael Pento, Michael is one of the best-known money managers and a top expert on bond markets and currencies. Michael is a regular contributor to USA Watchdog, Fox Business, CNBC, Bloomberg, and most other leading financial news outlets. His track record has earned Michael a spot as a real Wall Street insider. It's my pleasure to welcome the president and founder of Pento Portfolio Strategies, Michael Pento. Michael, thank you for joining us today on drescapes.com.
Thanks for having me, Barry.
Michael, tell our listeners a little bit about Pento Portfolio Strategies.
Well, we provide institutions and private individuals market research, and we also manage money for a living. We do so in a manner that's kind of unique in a strategy I invented called the inflation-deflation dynamic portfolio. I believe we have so much debt outstanding as a nation and as a globe that this debt must be defaulted upon, and it will be defaulted upon either explicitly through a restructuring or through inflation. And whatever avenue central bankers choose, we will invest accordingly. I believe that most likely avenue will take the course of inflation first, followed by deflation following that collapse. So you have to be nimble. You have to be dynamic. I have an inflation-deflation spectrum that slides anywhere between a rapidly rising dollar and rapidly rising real interest rates. In that case, I'd be short the market. I'd run it like a hedge fund. Or we have a case where we have a rapidly falling real interest rates and a rapidly falling dollar, and that's when I concentrate on owning precious metals.
Michael, I've read your book, The Coming Bond Market Collapse. I understand your notion that the United States is fast approaching the end stage of the largest asset bubble in history. Care to elaborate on a few key points on how you came to that conclusion?
Well, let's just take a look at Japan, for example. We have a nation that has 250% debt to GDP. We have a nation that has a 10-year treasury note that has a minus sign in front of it. It's minus 12 basis points. And yet they also have an inflation target of 2%. You know, somehow universally these Keynesian group thinking central bankers have adopted an inflation target of 2%. Now, I don't know when in history central banks have been able to hit a precise inflation target. Never before has that been the case. I believe they'll hit 2% and then overshoot that dramatically. And when you have inflation rising inexorably and you have an insolvent nation and you have a negative yielding 10%, a 10-year treasury or 10% JGB in this case, what does a central banker do? They have to either never stop buying JGBs, Japanese government bonds, which will lead to a hyperinflationary kind of Hungarian Pengo kind of scenario or Zimbabwe, or they have to start selling their hoard of Japanese government bonds, and that will lead to the biggest bond debacle in the history of the planet. So, you know, if you have a 2% inflation goal that's been hit and inflation is rising above that and you're an insolvent nation, then you should have a 10-year treasury that trades in the double digits, not with a minus sign. So you can imagine what's going to happen to Japanese stocks, Japanese bonds, the Japanese economy, the world economy, because we're all pretty much, paddling up the same river. It's going to be a chaotic disaster such as the world has never seen, and that's my big fear.
In your book, you also highlight the similarities between the U.S. and European debt crisis. Seems the banks are attempting to create what I like to term as the great facade. By artificially creating false bull markets in bonds and stocks, they've actually painted themselves into a corner. Without maintaining continual growth in the nation's GDP, the whole thing blows up like a fireworks factory. Do I understand the points covered in your book correctly? And if so, please add your additional thoughts to this point.
Well, the whole goal, I think you do understand quite clearly. So the whole goal is to generate robust growth in the context of stable prices, which, as I said, they now universally defined as 2%. A funny thing happened on the way to that twilight zone goal of theirs to produce growth in a non-inflationary or low inflationary environment. What we have is no growth. You know, Japan has been flirting with a recession now. They've been in and out of recession for years on end. Europe is barely growing. The United States printed a 0.5% GDP print in Q1. of this year, and GDP's been falling for the past year. And then also what we'd be able to produce is inflation, because inflation is a product of the market losing faith in a currency's purchasing power. Inflation has nothing to do with employment and has nothing to do with growth. It has to do with the growth in the money supply, not growth in the economy. So what we have engendered universally, I believe, is a condition of stagflation, or have I named it recessflation, where you have no growth and yet rising inflation. This is the most dangerous of all outcomes. So what does a central banker do when they faced with a decision? Do they actually continue printing and keep fueling inflation? Or do they admit their folly, stop printing, and cause another deflationary depression like we had in 2008? Now, I will tell you this. It's a little bit in the weeds, Barry, but bear with me. In 2008, the Fed funds rate was at 5.25%, and the yield curve inverted at that level. And we had, of course, the collapse of money supply growth. Banks couldn't lend because it's not profitable to lend when you're paying your depositors more than you collect on your loans. So we had money supply growth tank. The housing bubble rolled over on itself, and it brought the whole globe to its knees. And what did the Fed do? They took interest rates from 5.25 to 0 and left them there for virtually 90 months. Now, what they've engendered now is not only another housing bubble, but also a stock market bubble. And as I said, there's an unprecedented bubble in bonds. I'll give you an example. 30% of the entire developed world sovereign debt hoard trades with a minus sign on it. That's $8 trillion worth of sovereign debt. So what are they going to do? There is no escape. This is what's going to happen. I believe we're going to have a very bad case of stagflation throughout the world, and that's going to grow worse and worse. And then they will decide what to do, and how they decide to default on this debt is how we're going to invest. As I said before, if they explicitly default on the debt and allow this deflationary collapse to occur, it's going to be much worse than 2008 because the Fed took rates from 5.25 to 0. Now the best they can do is take back their one rate hike, which was 25 basis points, what they did in December of 2015. So the Fed is out of room. They've also went down the QE road. They put the Fed's balance sheet that was at once $800 billion. They put it to $4.5 trillion. So they're really, what we know is QE was ineffectual. We know that there is no wiggle room to reduce borrowing costs much more than just 25 basis points, not the 525 basis points they did before. So we're going to have a very devastating depression. So I mean, there are going to be times, this is what I really feel. There are going to be times of cycles where you have devastating deflationary depressions like 2008, followed by hyperinflationary bubbles like we had running up to that era. So you have to be able to have a dynamic investment strategy to profit during both scenarios.
Michael, shifting gears for a moment, let's sidebar and continue with some precautions people can take to insulate themselves against the coming crisis. What about the importance of precious metals being part of a person's portfolio? Any ideas on what form, paper versus physical, or perhaps a combination of both? What do you feel?
Well, I don't really like paper gold too much. I kind of eschew that. There's no reason to do that. There's a company that I own called BitGold. They actually allow you to store your gold for free and instantly monetize that gold through a credit card. So you could just liquidate your gold in a matter of seconds, attach that specific amount to your credit card, and you can monetize it instantly, spend it anywhere. MasterCard is accepted. So if you want to store gold, you can do it that way using that BitGold company called Gold Money BitGold. I'm using that. You also should take physical possession of precious metals. I also encourage that to be the case, as well as gold mining shares. Gold mining shares are less than half of their value that was evident in 2012. So there's a lot more upside room to go. Because as I said, I don't think there's any escape either outcome, deflationary depression or hyperinflation. And both those scenarios probably are very, 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 very beneficial for gold.
What's your input on the importance of holding physical cash during the time of an economic crisis?
Well, you should have some cash as well, but I much rather have you can have grams of gold that can be used as barter. So you should hold physical gold in your possession, and I would have this company BitGold. Not that I'm pushing this company, but they actually will deliver your gold in grams of gold. So that's about $40 as we speak today. So very, very economical and very, very easy to monetize.
I'm just going to add in real quick, I think that's worthy of another post down the road about this company. I'd like to learn more about it. But Michael, share with our viewers your interpretations on offshore investing versus the all of your eggs in one basket mentality.
Well, you have to be diversified. You can't have all your eggs in U.S. dollars, and you shouldn't have them all in Japanese yen or renminbi in China or in euros. You should have a very diversified portfolio. The goal here at Pento Portfolio Strategies is to wait for this cathartic wipeout, this unprecedented recession, hyperinflationary crack-up boom to occur. And then after that fallout, because we have a lot of cash, we're actually short the market. We own gold. We're short the market and we have lots of cash. After this fallout ensues and consummates, you're going to have an opportunity, hopefully, once the world embraces money in specie, goes back to a precious metal standard of money, you'll be able to invest in a diversified basket of dividend yielding companies around the world in many different currencies. That's the ultimate goal. That's where we want to end up. But we want to also profit on the way down. You could have shorted the market in 2000, made a lot of money. You could have shorted the market as we did in 2008, profited very well. And I think you have another opportunity to do so. Let's not kid ourselves. Since QE ended in the United States, and that ended in October of 2014, the markets have gone nowhere. And the Dow, as we speak, and this is being recorded, I think what's today, the 18th or the 17th?
Today's the 19th.
Today's the 19th. So as of the 19th of May, 2016, all of the major averages are in negative territory for the year. This is not a good scenario. Please don't believe the hype you hear on CNBC and the rest of the channels that'll tell you that everything is fine. This is the most dangerous investment scenario in the history of the planet Earth. You have CAPE ratio on the S&P 500 at record highs. You have price to sales that are off the charts. You have total market cap to GDP, which is very, very high in historic terms. You have all these metrics signaling median PE ratios. All these metrics are screaming, get out of stocks. The risk is not worth the reward. So you should be short the market right here, and that's what we're doing at Pento Portfolio Strategies.
Any thoughts on why a mere 0.03% of Americans see the value of owning an offshore bank account? By far, this is the lowest average of any developed nation. A little research will easily reveal most U.S. banks are holding an average of slightly less than 3% cash reserves, while many foreign banks are ranging several times that amount. Why are so many people missing this rather important information?
They believe Jack Lew, and they believe President Obama. They believe Janet Yellen, and they believe that the United States dollar will always be the world's reserve currency, even though we have $20 trillion of debt. We have deficits that are going to be north of $1 trillion per annum very shortly. And I believe that the world will, and the world is now moving away from the U.S. dollar as the world's reserve currency status. And once that goes away, you'll understand that really the only money you should ever put any faith in is that which is backed by gold. And if you cannot find a currency backed by gold, and there's only one that I know of, and I certainly wouldn't be investing in that currency because that's owned by ISIS, I would think that you should put your faith in physical possession of the precious metal.
Michael, I know your time was limited, but can you give me about 4 more minutes? I have a few more questions. Okay, thanks. What are your thoughts about folks needing a so-called Plan B to best survive what lies ahead?
Well, I talked to you briefly, Barry, before the interview started, and I actually love what you're doing as far as farmland is concerned. Living off the grid, having animals, being able to have enough land to provide food, I believe is going to be an essential part of your viability going forward.
Good. When am I picking you up at the airport? I want to show you around.
I might just do that, by the way. I might just take you up on that. A lot of history that's not very well known. If you look at the history of the United States and the history of global economies, there's been a lot of occasions where you would need to have the ability to raise your own food and be self-sustaining and be able to protect your land from intruders and from governments. So, those times in history are coming back. We've lived in kind of a nirvana here, a little bubble since the Great Depression. The credibility of central bankers is coming to an end. We're going to eschew fiat currency on a global basis. And the reason why we're going to eschew that is because we are going to learn the hard way that you cannot artificially grow an economy. You cannot abrogate markets forever and end up with nirvana. We are going to have the most devastating crash in the economy on a global basis that we have ever witnessed. That includes 2008 and that includes 1929. So when that occurs, you'll see people look for farmland. They'll seek shelter and safety into precious metals, and they will never again, hopefully, for a very long time at least, ever trust central bankers and governments with their savings.
Michael, seems to me that rarely is it ever mentioned in Plan B the importance of holding a second residency or second passport. Any well-balanced Plan B has to include an exit strategy. History will prove this to be true time and time again, yet rarely is it ever brought up in discussion. Any ideas as to why this is?
Well, as I said before, a similar answer is that there's just too much faith in fiat currencies in general and way too much faith in the U.S. dollar. You don't know, and I don't know, which currency is going to blow up first. It very well could be the Chinese renminbi, because they have increased their debt outstanding 28 times since the year 2000, and they've built their so-called economy recovery after 2008 on debt, and that debt was raised from the People's Bank of China to build empty cities and empty airports and just an empty fixed asset bubble. So we don't know if it's China. We don't know if it's the yen in Japan. We don't know if it's the euro. We don't know which country is going to blow up first, but you should have afforded yourself the opportunity by owning another passport, having dual citizenship, so you have spread out, you've diversified your options rather than just concentrating on one area, one section of the world, because any one of those sections is going to blow up first, but you don't want to be caught in that one area and not being able to get out. So you buy yourself some time and some flexibility and some freedom by owning that second passport and that dual citizenship.
Michael, my final question. For the many who are still sitting on the fence posts, provide us with Michael Pento's 1, 2, 3 list of what they need to be doing right now to best protect themselves from what seems to be rapidly heading our way.
Well, number one is you should be increasing your allocation in your portfolio. The higher fiat currency regime is going to blow up. So you're going to have some physical possession of precious metals, and you should also own some mining shares. And also we'll talk about that maybe in another segment, that company BitGold, where you can store your gold at a Brinks vault or anywhere around the world and instantly monetize it. That's number one. Number two, don't let this opportunity pass you by for the third time. So you had an opportunity when the market went down 50% in 2000 and 2008. You have another opportunity right now in 2016 to go short the market and profit from this debacle, which is, in my opinion, virtually unavoidable. It's going to happen. And the third thing you should be doing is, as you've indicated and I've indicated on this interview, get yourself another passport. Get yourself dual citizenship somewhere, either in the Eurozone or Central America, someplace where you can escape if things go bad in the domestic area where you earn your living right now and where most of your money is parked.
Michael Pento, president and founder of Pento Portfolio Strategies. Thank you for joining us on the drscapes website and the drscapes YouTube channel.
Thanks for having me, Barry.
Michael, what's the best way for our listeners can reach out? How can they reach out and connect with you and connect with Pento Portfolio Strategies?
So the website is PentoPort.com. My email address is mpento@PentoPort.com. And the office number here is 732-772-9500.
Michael, thank you so much. Stay tuned to the drscapes website and YouTube channel for more thought-provoking interviews with some of the top people in the world sharing their expertise of their respected fields. Till next time, this is Barry in DR.